Another day, another rise in the cost of living and potentially your mortgage repayments. 0.5% is enormous. It's the biggest interest rate rise since 1995, and it means just over 800,000 of us on tracker mortgages will see our monthly repayments go up straight away, while just over 1 million of us on standard rate variable mortgages could also see rises very soon. In fact, a 0.5% increase in interest rates could add around £74 a month to a typical variable rate mortgage, or £888 a year based on a 250 grand loan with a 25-year term.
I'm very, very worried about taking out a variable rate mortgage. I know someone who did that 2 years ago and it's already gone up 3 times in that period.
Serena is 24, a first-time buyer looking to get a mortgage and a flat in London.
So it is very stressful to kind of think about the interest rate rise and what that might mean for me, who has to make a decision about whether to kind of fix a mortgage straight off the bat now or kind of take my chances and wait it out.
Has the interest rate rise and just the general increase in the cost of living made you think twice about buying your own place?
After 3 years of living at home, I've saved the money, but now it's just a case of I have the money saved, but the environment I'll be buying in is just so up and down. It's making me think, do I wait a year? But who's to say the situation will be any better in a year?
So why is the Bank of England increasing interest rates? The reason is inflation. In other words, prices, which, as we know, are sky high and continuing to rise.
The bank's been very clear. They want to make sure that we don't get into what's called a wage price spiral. And that's when inflation rises, people go to their employers and they say, look, inflation's higher, I'd like a pay rise. They want people to think that inflation is under control or will come under control so that they don't go and ask for pay rises, which feeds already high inflation.
But is raising interest rates an old school method for tackling modern inflation? Some economists argue that 1980s high inflation was different to what we're experiencing now. Back then it was driven by demand. We kept spending, so prices kept rising. The inflation now is caused by a lack of supply when it comes to energy, fuel, food and labour. Plus, the workforce today is very different to what it was back then.
Right now, unionization's at about 20%. Public sector employs only about 17% of people. So that risk of a wage price spiral is a lot less likely than it was in 1980.
So, with energy bills and the cost of fuel sky high, what's the advice from the money experts?
So look at everything that you're doing. Look at where you're shopping, how you're shopping. Look at waste. Look at how you're using your home, your energy, how you're getting to work. And every little thing that you do to save money will help.
For millions of us, mostly middle and working class, the cost of living is becoming the cost of surviving. And that's why many people think the government is going to have to help out again. The question is, who does it help? How much help does it offer? For how long? And who pays for that help? Paul Hawkins, GB News.